We have watched the stock market roar higher over the years. This has been a constant and never-ending bull market which will be written about in the pages of history. There's just one problem. It has been in recovery mode for over 10 years. It's not supposed to happen this way, and yet here we are. Central banks are still supporting the market. Stock buybacks are the only buyer, and eventually something will have to snap. You came here for the truth, so let me unveil that for you. Today we're going to have our focus specifically on stock buybacks. I want to look a little bit into the history. I want to talk about what's happening today. I'm going to show you how much is happening on a monthly basis, on a quarterly basis, annual, going back before this year and beyond. So let's begin by taking a look at the stock market itself. The S&P 500 has done considerably well since the beginning of this year. What we have noted previously is that using the fund flow data from the EPFR and Lipper, we have found money is actually leaving. Can you believe this? Money is leaving equities right now, and yet we have seen the stocks going higher and higher. This has been going on for months. I've documented it here on the channel many times before, and I know that many of you are aware of this already. But who is the only buyer at this time, at least publicly? And we find that it is, in fact, stock buybacks. We're going to look further into the buybacks. I want to show you that this is a documented fact. I'll pull up that data in just a second. Here you can see the total return this year so far. Look at how excellent the performance of some of these different assets have been. Whether we're looking at the top of the list with crude oil, you can see information technology and NASDAQ right near the top as well. Consumer discretionary right there at 20%. This is showing us that we have done very well in terms of equity performance and also in oil. You can go down the list and you see the S&P 500 showing 16%. This has actually surprised a lot of people when you think about it, because of the tide that has come in. A lot of this has been making waves in the news. We have seen ups and downs, but not in relation to the stock market. When you look at the economy, there have been a lot of fears. There have been slowdown. There has been a lot of chaos, and yet, despite all of that, the S&P 500 roars higher. You can see the company share buybacks over the years. Obviously, this has increased. I mean, we can see it from the financial crisis time frame, this low point I'm showing you on the chart. And ever since, for the most part, it has risen higher and higher. Now, why has this been happening? What happened in previous years? Well, I want to give you some more data. I want to break it down in dollar terms as well. This information is actually provided by Goldman Sachs. And in here, they mentioned something I thought was too funny to pass up. You could see right in this first one here showing you the history. By the way, this chart at the top goes back from 1880 all the way up until the present, just giving us an idea of how things have changed. 1982, the SEC adopts Rule 10b-18. In the past, open market buybacks were not illegal, but were typically avoided because U.S. companies feared government charges of market manipulation. So the way that they spin it is making it seem that there wasn't necessarily any way that this could be determined illegal, but if they did it, then it's market manipulation, and of course, they would be in trouble for that. So this is not really explaining it properly, but of course, they're definitely on the inside. As a result, U.S. companies historically returned cash to shareholders via dividends. From 1880 to 1980, the dividend payout ratio averaged 78% of earnings. There are more details in here on that, but I just wanted to give you an idea where things were previously, where they are today. You used to get more dividends. What does that mean? You put your money into this stock and you are going to get a payout all the time, consistently, whether that stock is going up or down. Yes, they can change how much they're paying out in dividends, but if that company's doing well, chances are you're going to get more dividends, and that's really good. That makes you as an investor want to keep your money in, not buy and sell and buy and sell, and you have these big swings up and big swings down. Today, you have a different story than where it was previously. It's good to give your shareholders dividends because they stay in. They're not going to leave if they know that they're getting a paycheck very soon, just around the corner. That's the stability that has been lost by a lot of these companies. Now, a lot of them do give out dividends, but it wouldn't be as much as it was previously. And we can see that the market has been historically very volatile in the past, in the recent past, and this could be a contributing factor to that. I've shown you this before, but I think it's so important and relevant to this video. Corporations are the largest source of equity demand. You read that correctly. The largest source of equity demand. That means they're buying more than all other groups, whether that is corporations, foreign investors, pension funds, mutual funds, and so on. Corporations are at the top of the list. And you can see they're buying billions and billions of dollars more than all of the rest of them. In fact, they have done so at a rate we have never seen before. 2018 broke records. 2019 will break that record, it looks like. There was over $1 trillion worth in 2018 that were purchased. Stock buybacks are unfortunately doing this disservice to these corporations in the long term. This is causing these distortions, and then we're going to have a wild ride down as a result. You cannot do this for a long period of time. This would be done normally on a short scale. You wouldn't have all the chaos. Yes, there are times in which this might be the right thing to do, but to consistently do it as much as they're doing today is nonsensical, and it is not really beneficial, because if you look at the way that Warren Buffett says, well, it's a great way to give those investors a boost on their stock. Yes, that works like that. However, why is it that every time these companies do stock buybacks, the insiders sell right after? They know something that the general public doesn't. They always do this. I have documented this on the channel multiple times. We have a stock buyback, stock increases in price, and insiders sell at that point. You tell me what's going on. Stock buybacks used to be illegal. Now they're a major part of how companies spend their cash. There's a breakdown here that is interesting if you'd like to get into it, but I just wanted to break down something very quickly at the bottom. A stock buyback is basically a secondary offering in reverse. Instead of selling new shares of stock to the public to put more cash on the corporate balance sheet, a cash-rich company expends some of its own funds on buying shares of stock from the public. There's more information in that second paragraph there if you want to check it out. But all I want to know is, when will this change, if ever? Because this is a time in which we have seen record amounts. Will they do what they did back in 2008, 2009, where we saw this actually reducing significantly? If that's the case, could be from different issues. Maybe they're worried about the future. Maybe they don't know what's happening. They're starting to put their money elsewhere. Well, either way, what we can see is that it's going to have a dramatic impact. And then what happens? Well, you have the central banks. They have to come in. They have to print money. And then if they are down significantly, then real investors can actually come in and buy them up. And that's great. You want people to buy the stocks. It's not as if you want them to tumble necessarily, but you want them to be bought at a level that's real, that's realistic. And unfortunately, many cases today, that isn't happening. This is a quick chart here, record buybacks compared to the S&P 500, and they're quoting CNBC. Companies buying back their own shares is the only thing keeping the stock market afloat right now. That was back in July 2018. And right now today, it seems like the trend has still continued. Yes, we have central banks, we have easy money underlying all of that, but at the same time, we are seeing the stock buybacks being the primary buyer, that's for sure. You can also see that what we had previously, what looks like potentially 2007, I think that is, maybe 2008. And what we had was very, very large amount of stock buybacks. They were rising every single year. And then, of course, financial crisis came and that was reduced significantly. And we're seeing the same trend today. Actually, 2019 is becoming quite excessive, to say the least, in the amount. We have already witnessed many, many more than last year this far into the year, and we'll see what happens. In this quarter, the first quarter of the year, there was well over $200 billion worth that were being purchased. And this is not a normal amount. You could say that there's some level that needs to take place that's always been happening. That's great, that's fine. But at this record level, it starts to set off a trigger in my mind, and it cannot be ignored. Companies are putting tax savings in the pockets of shareholders. That's right. This article is actually from 2018, but the reason I wanted to mention it to you was to give you some understanding of how much they're buying back. Now, 2018 numbers are lower than 2019 numbers. Look at this, $4.8 billion a day. $4.8 billion a day of stock buybacks. That's insane. That's incredible. And I just wanted to show it to you to give you that sense of how much they're actually printing. At the bottom in that chart, you can see corporations no longer share the wealth, showing you the red line, which is the wages to profit ratio. And all I wanted to note was that these corporations, they're making more and more money every single year. And unfortunately, the average individual doesn't see the benefit of that. It tends to be those at the very, very top that always seem to get the best of the best, and whatever that is, they're always able to benefit when the average person cannot. If you look at it through the cycles, there are these crashes that occur every so often. In those instances, you watch as the average individual loses their job, they have to sell their home, their 401k gets decimated, RRSPs or supers, depending on where you live, their retirement accounts are in a struggle, their pension fund, they don't even realize it, but it is quickly becoming underfunded. And then those at the very top, the top 1% or higher, let's say, those people, they actually benefit from these crises. So we have to start looking at that and think to ourselves, who stands to gain from all of the panic and the chaos that will ensue? That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you are supporting me, you're supporting this channel and the truth. So I do appreciate that very much. If you want the financial education that wasn't taught to you in school, these two books have everything you need, top to bottom. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. I have the audiobook coming out on iTunes as well as on Audible for Amazon. So stay tuned for that as well. And last but not least, if you want some more detail, you want some more data, you want to check out this video here. If you haven't watched it already, definitely click on it and I will see you there.